the risk factor is there's someone that has the ability to issue $150 billion worth of stock in order to solve a problem. As we know by looking at the world, oftentimes when you have someone with enough power to make a $150 billion decision, it's coin flip. They might make the right one, but they might make a $150 billion mistake. And, the difference between that and Bitcoin is in Bitcoin, nobody has the power to issue $150 billion of new Bitcoin. If they did, then you have 100 reasons why we ought to do it every month.
Since his business intelligence firm adopted the Bitcoin strategy in August 2020, MicroStrategy co-founder and executive chairman Michael Saylor has been one of the crypto asset's biggest advocates. In just 2.5 years, MicroStrategy's Bitcoin holding has grown from the initial $250 million worth of Bitcoin to over $4 billion. With approximately 132,000 Bitcoin, the Virginia-based firm remains the publicly traded company with the highest amount of Bitcoin on its balance sheet. In addition to investing in the leading crypto asset, Saylor and MicroStrategy are also making giant strides in facilitating Bitcoin's global adoption. After he resigned as the firm's chief executive officer last year, Saylor revealed that he made the move so he could focus solely on the Bitcoin side of the business. In December, Saylor announced that the firm was working on some Lightning Network-powered software and solutions, which would be released later in 2023. According to the business executive, the software and solutions will support enterprise marketing, proffer cybersecurity solutions for corporate websites, and help corporations make certain content available only to subscribers who pay the required amount of satoshis. Saylor explained that the Lightning Network, which he described as the Internet of Money, will help corporations and their clients avoid the many pitfalls of traditional payment methods. In a little over 2 years, MicroStrategy has gone from investing in Bitcoin to avoid the staggering effects of inflation to becoming a major shareholder in the cryptocurrency industry. In a recent interview with the Bitcoin Layer, Saylor details the superiority of Bitcoin over other asset classes, especially equities. Before we listen to Michael Saylor's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
The fifth risk is competitive risk. Maybe I'm the best in the world at something. Like Nokia was the greatest mobile phone company and they got wiped out. Somebody else produces a product that's better than mine, that's cheaper than mine. They might be an in-kind competitor. I'm a restaurant. Someone else has a better restaurant. They wipe me out. I manufacture steel. Someone manufactures steel cheaper. They wipe me out. I'm an airline. Someone else has cheaper flights. They wipe me out. You cannot avoid competitive risk over the long term. But there's another kind of risk, which is like not in-kind competition, but I'll call it technology risk. I'm the world's leading manufacturer of horse buggies. And then Henry Ford comes along with a car and nobody wants horse buggies anymore. Or I'm a horse breeder, or I'm a buggy whip manufacturer, or I produce electric light bulbs that are incandescent and then people want fluorescent. And then I have fluorescent light bulbs and they want LED light bulbs. And so over time, new types of technology, I'm the world's leader in typewriters and the people want mainframes or computers or word processors. And I'm Wang and I'm the leader in word processors and I got wiped out by the PC. So there are always technology cycles and here is it's a cruel risk because the world is full of examples of companies that got wiped out by a better technology. Xerox, Kodak. But the world is also full of companies that got wiped out because they saw the new technology coming. And so they made an acquisition or they invested obscene amounts of money to compete and they still failed, even though they thought they were going to compete. This technology risk drives that strategic risk element up. People justify bad strategies based upon technology threats. So ultimately, and of course, the reason that they make the $10 billion strategic mistake is they thought they were fending off Time Warner decided to merge with AOL in one of the most catastrophically, failed mergers in history because Time Warner said, we need to get into video streaming and the internet represents a risk to the media business. So the solution was to buy AOL for $150 billion. Now, AOL said, oh, we're at risk from, Google and the like, and so we have to sell ourselves. So you have one frightened, struggling company merging with another frightened, struggling company, and the result, when the dust settled, was something like $150 billion to $200 billion of shareholder capital got wiped out. But and was that a governance failure? Or was that a strategic failure? Or was that a technology failure? All those risk factors drove people to light $100 billion on fire. They all thought they're doing the right thing. But of course, this is human action. The risk factor is there's someone that has the ability to issue $150 billion worth of stock in order to solve a problem. As we know by looking at the world, oftentimes when you have someone with enough power to make a $150 billion decision, it's coin flip. They might make the right one, but they might make a $150 billion mistake. And, the difference between that and Bitcoin is in Bitcoin, nobody has the power to issue $150 billion of new Bitcoin. People basically become, you could call them hypochondriacs. They imagine that the world will end if they don't save the whales, save the seals, stop the carbon, stop nuclear power, if we don't get to the moon, if we don't get to Mars, if we don't not get there, if we don't start the war, if we don't stop the war, if we don't change everybody, stop nylon, if we don't stop oil drilling in the Gulf of Mexico. Everybody imagines things. If we stand too close together, if we don't close the schools, if we let people get on airplanes without getting scanned in metal detectors, if we don't, there's always a risk, and every risk justifies $100 billion or $1 trillion decision, and generally they're all mistakes.
Bitcoin's 21 million supply cap is undoubtedly one of its best qualities. Together with its network effects, immutability, censorship resistance, and true decentralization, the asset is no doubt superior to all existing forms of money. That is why people like Michael Saylor strongly believe that the asset can easily become a multi-trillion-dollar asset class within the next decade. Cathie Wood's investment management firm, ARK Invest, estimates that Bitcoin will be exchanging hands over $1 million per coin by 2030. Several other analysts and institutional investors have similar predictions, all because of Bitcoin's great qualities. Let's get back to Michael Saylor's interview as he discusses two other great risks associated with equities and equity indexes.
Technology risk is facing your firm. Over 100 years, you're going to find whatever you're producing gets attacked, right? If what lasted 100 years? John D. Rockefeller's oil companies, they produced a barrel of oil. What was the threat? Well, it's threatened by electricity, electric cars. Did it work? Well, first it tried. Then we had electric cars in 1920, but they failed. But then 100 years later, they didn't fail. Nuclear power was a threat. Natural gas is a threat. Liquefied natural gas is a threat. Oil from another country is a threat. Everything's a threat. Maybe we shut down nuclear power plants. It's not a threat. Maybe coal's a threat. Maybe we won't need as much energy anymore. Solar is a threat. Maybe wind is a threat. Maybe hydro is a threat. Everything is a threat, or it isn't a threat, right? And you have to live through 100 years of that. And that means you got to have a board of directors deciding whether to spend all of the shareholders' money to fight the threat. And of course, a lot of times the answer is I have to have the resolve to not react to the threat, because 9 out of 10 or 99 out of 100 of the threats don't form, but then occasionally the threat does form. So then you got 7, political risk. And political risk can come from the mayor of your town. The mayor decides that they don't want to have your kind of business within city limits, and so they zone it out. Actually, it can start at the neighborhood zoning board. They can zone you out. Then the mayor can zone you out. Then the governor can change the regulations. Like right now, New York State, is suing Paxos over their stable coin. Okay, it's a New York action. It's not even a federal action. So the state can take action against you, or your own country where your domicile can take action against you. Or a foreign country, another nation state, can take action against you, banning you from their business or their citizens. So you never know where those political risks will come from, but political risks work because a corporation has nexus and it has legal standing, which means there's a CEO that's going to actually have to fly around the world. So, you think that you're immune, but say you operate an online poker site, and then you are domiciled in Monaco, or you live in UAE. Well, so the CEO of the online poker site, is flying from Monaco to the Bahamas on vacation, and the airplane stops in DC to change planes, and then he gets arrested in DC because he's crossed the U.S. jurisdiction, and he gets arrested because he's a person moving through, United States airspace, and while it might be legal to operate poker sites in cyberspace or outside the U.S., it's not legal in the U.S., and so there you have political risk.
What are your thoughts on Michael Saylor's assessments of risks associated with equities and Bitcoin's superiority? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks for watching.